Welcome to the Chrisman Commentary, Daily Mortgage News Podcast. I'm your host, Robbie Chrisman. Topics on today's episode include how to make money in this industry, my interview with ALTA's Chris Morton on the latest in the title fraud space and how a cohesive response could be the key to the industry eliminating some of the criminal activity out there. And in the capital markets, yes, it's a quiet week post-Thanksgiving holiday, but we do have some data that is meaningful out there you may want to pay attention to. When I think about a point of sale, I want something that's simple, easy, and efficient. The Big Point of Sale offers a highly configurable, easy-to-install point-of-sale solution. Their simplified consumer workflows and web-based portals allow for consumers and loan originators to collaborate with the back office team to keep everyone informed throughout the loan process. To learn more, visit thebigpos.com. When did our business start with the catchy slogans? Stay alive in 25, stay in the mix in 26, it'll be heaven in 27. How about try to earn a little revenue every day, day after day? Smart mortgage bankers look at units, not dollar volumes. If an LO does $5 million a month, is that one $5 million loan or 10 $500,000 loans? And if your cost per loan is $11,000 on a $5 million loan, that's good since the monthly hit is $11,000. But on the 10 loans, that would be $110,000. What are you trying to do to improve your pull-through and not spending money on credit reports on loans with little chance of funding? After all, higher pull-through automatically lowers your cost per funded loan. On a larger scale, IMB numbers are dropping as lenders merge, are acquired, or throw in the towel. Lenders have certainly adopted ARM, home equity, and non-agency products. And investors in fixed income securities base their decisions on buying securities on the economic outlook. Like, what will happen to inflation in Japan? How might politics in Iceland impact its economy? What are the measures of housing and jobs data telling me about the United States? Now that the government shutdown has ceased, probably temporarily, news has been flowing from the federal government as well as private sources. For example, home prices rose 1.3% year over year in September, according to the Case-Shiller Home Price Index. The housing market's deceleration accelerated in September, with the national composite posting just a 1.3% annual gain, the weakest performance since mid-2023. For those who prefer looking at the glass being half empty, this marks a continued slide from August's 1.4% increase and represents a stark contrast to the double-digit gains that characterized the early post-pandemic era. National home prices continue trailing inflation, with September CPI running 1.7 percentage points ahead of housing appreciation. This marks the widest gap between inflation and home price growth since the two measures diverged in June, with the spread continuing to widen each month. And with the Fed entering its pre-meeting blackout after today's short session and officials showing little urgency to adjust messaging amid strong market confidence in a December rate cut, the risk is that policymakers could disappoint investors if they're not actually leaning toward easing, potentially triggering further volatility. And we've already seen expectations for a rate cut in a week and a half swing from around 30 to 80% over the course of the last several trading days. Expectations are still for a quarter-point risk management cut, and that data before the January meeting will support further normalization, while recent market action has strengthened the Treasury bid. 10-year yields briefly fell below 4% as weak labor indicators from ADP, softer core PPI, and mixed retail sales reinforced expectations of cooling economic momentum. For today's interview, I wanted to welcome back to the show ALTA's Chris Morton to talk about why seller impersonation and wire fraud persist despite heightened awareness, what new and harder to detect schemes are emerging, how the industry can balance speed with security, and how shifting market and technology conditions will shape the next wave of fraud risk and preparedness. He's Chief Executive Officer at the American Land Title Association, which ensures property rights for homeowners and supports the title industry. Wire fraud continues to rise. Seller impersonation is up despite years of all these awareness campaigns. I'm going to cut right to the point here. What systemic gaps still exist across the mortgage and settlement ecosystem that allow these crimes to persist?
Yeah, so thanks, Robbie, and appreciate the opportunity to be with you today. I think, look, awareness is important, but we have to even do more than we are. I mean, I think we've got to build a significant understanding of the risks. I think that that requires us to do a number of things. We've got to continue to up the prioritization around fraud, prevention and protection. We've got to continue to adopt standards and tools and innovate. The bottom line is the reason this occurs is not necessarily as a result of not, having significant efforts in place. What is happening is criminals, and I'll say criminals. I got to be honest with you. I hate the term fraudster. It sounds like it's some fun activity. These people are sophisticated criminals, and they're taking advantage, as all criminal actors are, in every sort of opportunity and gap that exists, that they will actually find maybe quicker than the industry can find. And so we've got to continue to try to be ahead of that. But let me take a step back and just sort of give a little bit of context. Like, the real estate transaction process, we know it's a prime target because there's high values involved in terms of dollars. It's often an urgent sort of situation in terms of closing. And honestly, like all financial transactions, there's elements of complexity here. So, but if you take a step back and you look at the data from the FBI, the increase in fraud across the economy is really growing. It's not just real estate, it's in every financial sector, but real estate obviously is, as I said, attractive because one successful effort can result in a 6 or 7 figure payoff given real estate values. So that's the reality we face. But we've got to innovate and address these threats, protecting consumers and lenders, because we know the criminals are going to innovate and adapt. And so that's where our focus has to be. And I'll just speak from the title perspective. The industry really is doing that. We've made significant investments, to keep pace with these evolving threats. And I'll give you some, sort of examples of that. We've expanded the use of advanced security technologies like multi-factor authentication, encrypted communications, secure wire verification tools, and fraud detection, that sort of flag suspicious activity in real time. And many companies are using identity verification platforms, using AI-driven document analysis, for instance, or secure portals. So we've got to sort of double, triple, quadruple down on staying ahead with the right technology, with the right focus, prioritization. We also have to address these risks aggressively by setting industry standards. And I think that's where, again, we've provided some leadership and providing tools. We just recently actually updated our best practices to strengthen identity verification, notary and agent signing vetting, and we're working collaboratively with the entire industry to create, educational resources, leading, efforts around wire verification and fraud prevention, with things like model callback procedures. Collaboration with policymakers is also important. But ultimately, look, we're not gonna close all the gaps, but we can communicate better, we can prioritize better. But most importantly, we've got to be sort of ahead of the game with tools and innovation. And I think, from a title industry perspective, this is like one of the number one priorities, if not top of the list, at least, as we sit here today, because as you said, the risk is just continuing to grow.
I will stop using the word fraudsters and I'll use the word criminals. And
Good
obviously,
deal.
these criminals are becoming increasingly sophisticated, but it's at a time when speed is prioritized in the industry. Everybody wants this efficient and quick loan origination process, which I'm wondering how to kind of balance efficiency and security in this environment where speed is prized.
Yeah, no, it's a great question. And look, we understand, certainly from a title professional perspective, but as we, our lender partners, investors, real estate agents, look, we're working on tight deadlines. We've got customer expectations that are high that we want to meet and exceed, and we've got regulatory requirements that we've got to balance. And so what's really important in that dynamic is emphasizing and building prevention into daily operations before you're up against the clock. So this is a sort of everyday, all day focus that we need to have, essentially treating the cybersecurity, sort of bucket as not as an add-on, but as an integral core part of your operation. And so when we sit here at ALTA, we're looking at how can we promote tools and workflows that allow companies to work efficiently while staying secure. And so some examples, verified portals to exchange wiring instructions, or integrated verification tools in the disbursement process. Looking at tools like Wiry and pay verification software, phishing simulations within your operation are really a critical component of a strong cyber defense. And verification software can stop fraud before funds leave an account. Phishing simulations help train your staff to recognize and report suspicious emails. So we're constantly talking about this, bringing vendors in, having forums, making sure that our members in the industry are up to date, are able to access these things, even working with folks on discounts and other kinds of things so that the smaller firms, can have access to that because, as I said before, we've just got to stay a step ahead. But let's be honest too. I mean, these tools aren't the be all end all. They're not foolproof. Technology has to be paired with protocols. You've got to have things like rapid escalation procedures. Your employees need to be trained, retrained, trained again. And so it's all of the above. And then let me say one thing. We talk incessantly and importantly about AI, AI, AI. AI is a really important tool within your operations, but somebody said, recently, it's accurate, right? But it's not necessarily precise. And in title work, precision is critical. And so I would just say, from the perspective of where we sit, like that's a really important takeaway.
Yes, certainly an important takeaway. I want to take this kind of into the practical realm. Now, what are the schemes that we're seeing surfacing most today? Where are vulnerabilities in the industry? I guess maybe this is naive on my part, but why is the industry finding these schemes or vulnerabilities that are exploited harder to detect or prevent?
Yeah, so I'll just talk, about the deep fraud area. Look, that's evolving, really beyond what we had originally seen on sort of simple forged documents, years ago, to really complex identity takeover, using stolen credentials, synthetic identities, even AI generated communications, and they're more layered, right? So there's different elements mixed in various types of fraud, making them harder to detect and prevent. The one of the biggest hurdles right now is the fraudulent messaging sophistication is making it really harder to distinguish it from legitimate communications. It used to be you would be really easily able to determine, an email with misspellings and, from a random email address that, clearly that was a sign of fraud. As we think about it, now you're getting communications that have legitimately looking branding, legitimately looking email domains, even phone numbers that are coming in that are legitimate phone numbers of people that you're working with. So, a few years ago was a lot easier, but AI and tech are driving a lot of challenge here. I'll say one thing is, if we look at, we've seen rates come down a little bit on the refi side. it's also occurring with greater frequency and severity in the refinance area. Milliman just did a study that showed that fraud and forgery represent now 40% of total claims cost on refinances in the title claim space. That's more than double on the purchase side, and the average fraud and forgery on a refinance claim is now it's $207,000, 7 times the amount of other claims that we're seeing. So I just say, this is sort of my plug that I've got to give, which is why you need the title insurance to back all of this, because these risks are real, and the housing finance system really is depending on a product that can manage across economic cycles, protect lenders, keep the mortgage transaction flowing safely. But beyond lenders, I'll just say this: we're also innovating to ensure that consumers have access to coverage that addresses this sort of new set of fraud risks. We just created new endorsements, the 49 series endorsements on the title policies that on the, beyond, again, lenders on the homeowner side provide post-policy coverage. So it's just not before the transaction closes, it's post-policy coverage for both new and existing homeowners against fraud and forgery. And it builds on what we did, and I go back to innovation, what we did more than 20 years ago when we created a homeowner's policy of title insurance that covered, post-policy risk like this. So we're looking at this holistically, just not just tools, not just training, but policy innovation on our products and those kinds of things. So the vulnerabilities are becoming more and more challenging and sophisticated, and we've got to think, how do we cover from all angles?
Part of covering from all angles would, at least in my opinion, would be a more cohesive defense against this. Is there such a possibility out there for kind of a coordinated anti-fraud framework for the housing finance industry, or are there barriers that are standing in the way that make that never to likely come to fruition?
Yeah, no, I think that's an amazingly important question, and I appreciate you asking it. I mean, I think, look, communication across industry partners is really, really key, and I think one of the things we drill in to the industry and the industry to their partners is making sure we're elevating communication, particularly around the issue of fraud, and this in a unified framework beyond. Beyond that, communication entails standards, which I talked about, sharing our tools, and in the education component. I mentioned the best practices. We offer a model that expanded identity verification, specialized staff training to spot, impersonation, notarization and signing agent controls, checks on third-party professionals and protocols for responding if fraud is occurring. We're also looking at, and I think communicating with our partners about recommended practices for selecting vendors. Because there's a lot of folks out there saying they can do these things, and it's important to really vet those vendors and have a sense of what should be considered and addressed in that process. The framework, again, it also has to acknowledge that technology is one piece, insurance coverage, particularly on the title side, is another that you have to have. But at the end of the day, I think whether it's title professionals, the real estate agents, the lenders, we've got to recognize that from sort of A to Z, we're the front lines in catching and stopping this criminal activity. We've got to elevate our communication. We've got to elevate our tools and share those across channels. And we're trying to do that. And I think while we've had new and different fraud risks, I think we have gotten a lot better across the industry in working collaboratively on this initiative.
Well, that's good to hear, and that's promising for the future. And the future is probably a good place for me to close with you today. What do you view as the next phase of fraud risk, and how's that kind of different than what the industry's seen before? And ultimately, what should companies be doing now to prepare for the future landscape?
Yeah, look, the scary answer is there's a lot of unknown, and we've got to be honest with ourselves. We've seen all sorts of challenges with, the sort of the evolution and rise of things like deep fakes. I hear stories about that kind of thing occurring more regularly with at larger transaction amounts. Um, and I think we've done a good job in pausing before we sort of take the next step in the transaction and really asking ourselves as professionals, you know, this doesn't feel right. I always tell my kids, trust your gut. I think we've got to do a lot more of that. But there's a universe of unknown, and I think we've just got to be honest about it, and we've got to focus on um, asking ourselves the question, what does that look like? Educating ourselves, what does AI's potential hold? Really understanding that technology. It is here, sort of get our heads out of the sand, some of us, and say, like, let's embrace it. Let's be as expert as we can. Let's try to challenge ourselves and anticipate that. But we've got to, just be nimble and flexible. I think at the end of the day, as a national trade association, I'll just speak from where I sit. It's awareness building is one thing. We're constantly issuing alerts to our members about new trends and things we're seeing. The seller impersonation phenomenon. We first heard about that, gosh, I think 3-4 years ago, in a sort of an isolated instance out in Arizona. I was at a meeting, and we were immediately working on tools and approaches. And I think we've got to lean into this challenge at the end of the day. And we've got to be mindful about the need of smaller companies, particularly in the title space. We're 90+% small businesses. We've got to provide resources that they're able to access, within margins and the challenge of running a small business. We offer a lot of free resources to make sure that they're up to speed. So, I mean, the honest answer is we don't really know exactly where the next risk is coming from, but we've got to be on our toes to react, and we've got to sort of think about the evolution of what's happening now and what it might look like in the future.
Yes, staying on one's toes in the face of uncertainty is certainly sage advice. Chris, I really appreciate you making the time for me today. Always a pleasure when we do these together. And I appreciate what ALTA is doing for the industry as well. So thank you very much.
Oh, thanks, Robbie. It's always great to be with you. Appreciate it.
U.S. Treasuries were mixed heading into the holiday, with shorter maturities slipping while 10-year and 30-year Treasuries extended their rally amid data showing lower jobless claims, firm durable orders, and weak Chicago PMI. Despite an overbought technical setup, analysts see limited risk of 10-year yields returning to 4.25%, expect support near 4.00% to hold as markets move past peak macro factors, and anticipate further curve normalization as investors price in a December cut and look ahead to 2026 policy easing. And mortgage rates fell in Freddie Mac's latest primary mortgage market survey, with the 30-year rate declining for the first time in 4 weeks. For the week ending November 26th, the 30-year and 15-year mortgage rates both fell 3 basis points to 6.23% and 5.51% respectively. From a year ago, rates are 58 basis points and 59 basis points lower. Today's economic calendar and month-end trade brings no data or events, but an early close for both equities and bonds. That's a 1 p.m. Eastern settlement for futures and a 2 p.m. Eastern close for cash bonds and stocks. We begin this post-Thanksgiving Friday with agency MBS prices better by a few ticks or 30 seconds versus Wednesday's close, the 2-year yielding 3.47 and the 10-year yielding 3.99 after closing Wednesday at 4.00%. Let's wrap up with a joke and some housekeeping. The parade has been on for more than 1.5 minutes. Now I'm confused because at the beginning, the announcer clearly said, "Welcome to the 92nd Thanksgiving Day Parade." But Thanks to this week's sponsor, the Big Point of Sale, which delivers a fast, flexible, and low-cost mortgage point of sale that gets lenders up and running in hours, not months,
while empowering loan officers and consumers to collaborate seamlessly from any device. To learn more, visit thebigpos.com.